Hello, everyone. Welcome to the market opening bell on Tuesday, June 24th, your 10-minute guide to the stock market. Markets are monitoring Middle East geopolitical developments, with Hong Kong stocks falling, then rebounding on Monday. The Hang Seng Index opened 194 points lower, dropping 257 points early to a low of 23,272 before stabilizing, closing at a high of 23,689, up 158 points or 0.7%. The X-share index rose 70 points or 0.8% to 8,597, while the Hang Seng Tech Index gained 53 points or 1% to 5,187. Total market turnover was 198.5 billion Hong Kong dollars. Southbound trading turnover was 98.8 billion Hong Kong dollars, with southbound funds recording a net inflow of 7.895 billion Hong Kong dollars compared to 1.551 billion Hong Kong dollars the previous day. Notable net buys included Meituan 1.515 billion, China Construction Bank 843 million, SMIC 678 million, PopMart 411 million, and Hua Semiconductor 150 million. Net sales included Alibaba 1.286 billion, CNOOC 326 million, Xiaomi 318 million, CSPC Pharmaceutical 201 million, and Tencent Holdings 144 million. Statistics showed southbound funds have net sold Tencent for 17 consecutive days, totaling 18.73 billion Hong Kong dollars. Alibaba for 4 consecutive days, totaling 1.998 billion, and net bought China Construction Bank for 9 consecutive days, totaling 5.853 billion. The U.S. struck 3 Iranian nuclear facilities, easing short-term uncertainties, leading to a dip then recovery in the Hang Seng Index. However, it faced resistance near the 20-day moving average at 23,720. Future developments depend on Iran's response. Technically, breaking the 20-day moving average could target the 10-day moving average at 23,900 as the next resistance. Mainland Chinese markets opened low but closed higher. The Shanghai Composite Index hit a low of 3,347 and closed at 3,381, up 22 points or 0.7%. The Shenzhen Component Index reached a low of 9,950 and closed at 10,048, up 43 points or 0.4%. Combined turnover for Shanghai and Shenzhen was 1.1225 trillion yuan, up 54.9 billion yuan from the previous day. The renminbi central parity rate ended 2 days of gains, set at 7.171 against the US dollar, down 15 pips from the prior trading day. Foreign media reported that at least 6 Chinese cities suspended car trade-in subsidies this month. While it's unclear when new subsidy funds will be released, the National Development and Reform Commission stated subsidies will continue until year-end. The suspension may slow car sales in the short term, but once the central government allocates the second round of 138 billion yuan in subsidies, sales are expected to accelerate by the end of Q3. Thus, the auto industry may face pressure until July, with market sentiment potentially recovering by late Q3. Xiaomi announced on its official Weibo that its first SUV, the Xiaomi YU7, will be officially launched on Thursday at 7 p.m. Chairman Lei Jun explained on Weibo that the YU7 is not a typical boxy SUV, despite not being a popular 6-seater model. The YU7 comes in 9 colors, including sports, fashion, luxury, and classic series. Lei also teased other products to be unveiled, including the foldable Xiaomi Mix Flip 2, the Xiaomi Pad 7S Pro with the Xuanjie O1 flagship chip and a personal smart device for the next era. He noted the event will feature many products and run long, urging viewers to prepare. Meituan announced a full expansion into instant retail prompting new retail formats to offer better value products and services. Its businesses, including Meituan Select, Meituan Flash, and Elephant Supermarket, will undergo upgrades. Meituan Select will continue exploring next day delivery plus self pickup and new community retail models, while exiting some loss making regions for efficiency. Meituan Flash will enhance its brand, expand categories, and partner with retailers to grow stores and flash warehouses, optimizing experiences in 3C appliances, fresh food, beverages, and daily necessities. Elephant Supermarket will expand to all Tier 1 and Tier 2 cities with its direct sourcing project covering 200 county-level agricultural areas nationwide. Reports indicate that during the 618 shopping festival, Taobao, Flash, and Ele.me hit a daily order peak of over 60 million, with Taobao Flash at nearly 40 million and Ele.me over 20 million. Retail orders grew 1.79 times year-on-year. Internally, Taobao predicts that by August 30, combined Taobao Flash and Ele.me orders will reach approximately 80 million daily. JD.com is entering the hotel and tourism industry. Analysts believe it's challenging to disrupt the OTA competitive landscape in the short term. Unlike food delivery, travel is a low-frequency service with complex system integration and customer service requirements. JD's customer overlap may impact Ctrip more, while its local consumption focus could affect Meituan and Tongcheng. However, Ctrip's supply chain barriers and Meituan Tongcheng's lower-tier market advantages are hard to challenge short-term. Iran's Monday attack on a U.S. military base in Qatar caused no casualties, leading to an over 8% drop in oil prices. Fed Governor Bowman stated that if inflation remains moderate, she will support a rate cut at the July meeting, becoming the second official recently advocating for an early cut. U.S. stocks dipped then recovered, with the Dow rising 374 points or 0.9% to 42,581. The S&P 500 gained 57 points or 1% to 6,025, and the Nasdaq rose 183 points or 0.9% to 19,630. Tesla launched its robo-taxi autonomous taxi service in Texas, boosting its stock by 8.2%. The S&P Global US Manufacturing PMI held steady at 52 in June, matching May's 15-month high. The manufacturing output index rose to 51.5 from 49.4, a 4-month high. The services business activity index slightly fell to 53.1 from 53.7. Growth between manufacturing and services became more balanced in June. The National Association of Realtors reported a 0.8% month-on-month rise in U.S. existing home sales in May, reaching a seasonally adjusted annualized rate of 4.03 million, rebounding from a 0.5% decline and surpassing market expectations of 3.96 million. Fed Chair Powell will begin attending Congress semi-annual hearings today, presenting the Fed's monetary policy report to the House Financial Services Committee. On Wednesday, he will appear before the Senate Banking Committee. Our stock pick today is CIMC Group, stock code 2039. CIMC Group is primarily engaged in the manufacturing and service of containers, road transport vehicles, energy, chemical, liquid food equipment, offshore engineering equipment, airport and logistics equipment, and firefighting and rescue equipment. Through business expansion and technological development, it has formed an industrial cluster focused on key equipment and solutions for the logistics and energy industries. In the first quarter of this year, the group achieved a revenue of 36.026 billion yuan, up 11.04% year-on-year, and a net profit attributable to shareholders of 543 million yuan, a significant 5.5-fold increase year-on-year. In the logistics sector, the group's container manufacturing business saw a year-on-year sales increase in the first quarter. Dry cargo container sales reached 531,200 TEUs. Last year was 494,400 TEUs, up approximately 7.44%, while refrigerated container sales surged to 36,400 TEUs compared to last year's 9,300 TEUs, a remarkable 291.4% increase, driven by strong demand for South American food exports, high cold chain freight rates, and growing demand for refrigerated containers. The road transport vehicle business, operated by CIMC Vehicles, recorded a first quarter revenue of 4.591 billion yuan, with domestic sales up 10.55% and a gross margin improvement of 2.9 percentage points. The airport and logistics equipment, as well as firefighting and rescue equipment businesses, benefited from large orders secured last year, leading to increased project completions and deliveries in the first quarter, boosting revenue. The logistics service business, operated by CIMC VTrans Logistics Technology, saw steady year-on-year growth in revenue and profit, primarily due to its end-to-end cargo logistics business benefiting from strong ocean freight demand. In the energy sector, the energy, chemical, and liquid food equipment business, primarily operated by CIMC Enric, reported a 24.2% revenue increase to 5.765 billion yuan in the first quarter, with net profit attributable to shareholders also rising. This growth was driven by efficient delivery capabilities, a robust order backlog, and a global business layout. As of March 31st, CIMC Enric's order backlog totaled approximately 28.309 billion yuan, with new orders worth 4.566 billion yuan signed in the first quarter. The offshore engineering business secured new effective orders worth $60 million in the first quarter, with a total order backlog valued at $6.3 billion compared to $4.7 billion last year, of which two-thirds were oil and gas related orders. In innovative businesses, the group's cold chain business intensified its strategic focus on pharmaceutical cold chains and industrial temperature control, prioritizing prioritizing in innovative businesses, the group's cold chain business intensified its strategic focus on pharmaceutical cold chains and industrial temperature control, prioritizing temperature-controlled equipment as a key new business strategy. The energy storage business continued to center on major clients and products, enhancing integration capabilities, establishing a comprehensive control system, and upgrading manufacturing bases through flexible delivery and supply chain integration to solidify market share with core clients. The modular construction business actively expanded in domestic and international markets, strengthening technological R&D and management improvements. Recommended buy price 6 Hong Kong dollars, target price $6.7, stop loss 5.65 Hong Kong dollars. I do not hold the aforementioned stock.